Hi everyone, myself Murugan. Happy to present another interesting video from Axis. In this video, let's get in detail of option buying. In fact, I take you people through a process by which you get it right. Because when you look at the option traders, there's a very common challenge they encounter while buying options. Because sooner they pay the premium, they know the reality that the time decay is something which goes against them and the break even point is far away. So, making money out of option buying is also a difficult task to achieve that. That may be the reason why a lot of us tend to think from the option selling perspective because most of the time it helps us to make money. But still, option buyers do exist. If you look at the counter, for every option seller, there is an option buyer coming into the picture. If at all, if option selling alone can make money, buyer of options will not come into the picture. So there must be a logic for option buyers to make money. And this is what precisely in this video I'm going to explain. But to explain things in detail, I'm going to ask you three questions. That what should be the ideal target when you buy options? The second question, how to handle the failure trades? And the third question, how much capital is really required to succeed in option buying business? By answering all three questions, you can definitely improve your option buying strategy going forward. Let me get started with the first question, that what should be the ideal target while buying options? To explain that, I've taken a option chain screenshot from nseindia.com, and by this time the market is trading around 14,000 mark, and you can notice that I've taken a strike from 13,500 till 14,500. And of course the market trades between 14,000 to 14,050. A few things I can do when it comes to buying options. You might have noticed most of us advise us to buy at the money options or in the money options instead of out of the money options, because the probability of making money out of the money option is too low. It is true that it is recommended to buy at the money options and in the money options, but anyway, this is the video not talks about that aspect. Rather, you buy any options, there may be a logic for you to make money. But what should be the check? You should make sure that you get it right. So let's first calculate with respect to at the money options. Then if a time permits, I'll talk about out of the money options as well. Let's say I am planning to buy a 14,000 option and I wanted to calculate the target for that, because I know now it is trading at 120 rupees. At what price I should sell so that I got a logical way of making money going forward. You may feel that if I sell it for 121 rupees, still 1 rupee is a profit. I'm not talking about that, because you're talking about a trade. But if you are happy with 1 rupee of profit, and if you continue to do this business, because every time when you lose, you're losing 120 rupees. Every time you're making money, you're making just 1 rupees. That's not a good idea about it. So if you buy options considering you're risking 120 rupees of the whole premium, then you should have some reasonable target in your mind and you should stick to that. What should be that target and how to calculate it? To begin with a target calculation, the very first thing I need is I need a delta calculations. If you really want to know how to calculate a delta, we have an exclusive video posted a while back. So you guys can definitely go and get it done. But in this video, I'm actually using the delta to figure out the target. So I may not spend much time in terms of delta calculation processes. Okay, now, as I said, we are now planning to work with a 14,000 call option. Am I right? 14,000 call option, which is currently trading at the rate of 120 rupees. So, and we have decided to buy this particular one. So we are taking the risk of 120 rupees, which is a premium risk that most of the option traders will agree to it. I'm not talking about you placing the stop loss, minding the technicals. I'm just working on a pure statistical note. Okay. Let's say when you risk 120 rupees upfront by paying those premium. Now, I just need to know the delta, because delta helps me in finding the probability. Am I right? So when I look at the delta, few things which I just want to notice it. Look at the delta of 14,000, which is important to me at this moment, because the chances of market settling above 14,000, I just need to know that. I want to keep it in my mind. Okay. So that is actually, I'm now calculating the delta for 14,000. Okay. So delta for 14,000 is somewhere in between 151 minus 120, okay, that works out to be 31 rupees divided by 50 rupees. If you are clueless how I get all these numbers, then you definitely need to know how I find the delta. But anyway, in a quick note, I'll explain you. The current premium is 120 rupees. If a market gains by 50 points, then 14,000 call option will also share the same characteristics of 13,950. So invariably it gains 31 rupees when market gains by 50 rupees. So the delta of 14,000 call option stays somewhere around 60%. Now I'm not mentioning at 62. I'm just approximately keeping it at 60%. So the market to settle above 14,000 call option is quite 60%. That's what market is actually, judging it. Okay. Now, by the way, I'm just wanted to be interested in 14,100 call option also, because my break even is somewhere around 14,100. So these two strikes are slightly important to me. So I'm now calculating, which is 14,100. So if I look at the 14,100 call option, that is around 70 will actually become 93. So 70 become 93, that is nothing but 23. So 23 divided by 50, 23 divided by 50. So if you look at 23 divided by 50, that is something around 46%. So I am actually taking the average of those two delta, which is around 55% chances I have, okay, in order to make money for this particular strike price. I've taken the strike price plus the break even point. I'm taking up the the average of the particular point, because sometimes the market can go even beyond 14,100. Sometimes market can be above 14,000 in a way that you get something back. So the very logical way of looking at it is around 55% probability is what. That's a very first step I've taken it. Okay, so two things. Remember, I've figured out the delta of the strike price. Then I've gone towards the break even area. Then I figured out the delta also. Somehow I got that something around 55% chances are there for me to make sense of paying this premium out of it. Now, I am now looking at it 100 trades. Okay, because I see this as a series of trades so that it becomes a business, not one time event of trade. So when I do 100 trades, I know that 55 trades can help me in making money and 45 trades can trouble me. So 55 trades, how much I make money, which is unlimited, I can make huge. That is what really we wanted to find the target. But we know one thing, that 45 trades, I'm risking that 120 rupees. So try to understand that I'm risking 120 rupees out of 45 trades. So if that is the case, I just now have to calculate that what is that 45 trades can cost me over a period of time. What is that my 45 trades can cost me over a period of time? So in order to do that, I've just taken the a quick calculation so that I don't make any silly mistakes when I do that. So that's equal to 45 multiplied by 120. So remember, 5,400 rupees I am risking in order to do this hundreds of business. 5,400 rupees I am risking in order to do this hundreds of trades. Okay, it means that 55 trade should be good enough to give me at least, I hope you people get me, that 55 trade should give me at least 5,400 for me to at least the break even that area. So if you really want to know the expected returns per trade, I mean, if you really want to know how much returns I need per trade, then you need to calculate that 5,400 divided by 55. That will just break even. Remember, that will just break even, and you can slightly get it higher in order to have a return on things. So if that is the case, what you guys can do is 5,400 divided by 55. So that works out to be 98 rupees. So remember, you need a returns of at least 98 rupees. Then your target for 14,000 call option should be somewhere around 220 rupees. I'm roughly taken that 10 rupees, 100 rupees from the current level, which is around 98 is what we got it. So you guys can even take slightly about 10% business margin. So if that is the case, 230 rupees is what you needed. So you should have a habit of holding this position till 230 rupees. This matters a lot. But since you are in at the money position, it's quite likely that you can make it. But remember, to make this 230 rupees, the market has to gain by another 200 points, or for this price to become 230. It is not that you have to make 230. For this price to become 230, the market has to gain by another 200 points. I think if you don't understand again this calculation, you can go and check out a delta video, because that makes much easier for you to calculate the option premium. By any chance, if you request a video regarding the option premium, the pricing of options in a very simple note, you can even request in the comment section. Anyway, coming back to this, our target for this particular one is 230. I hope you get it. If not, I request you to rewind this for about last 5 minutes and see that, because the very first question is what should be the ideal target, and we have to see as a whole business. So if you get it right, then it is wonderful. Then we have to go to the next one, that how do I handle my failure trades? So remember, in an example, what we have taken is 14,000 call option, where the delta is somewhere around 60%. Okay, so and we have noticed around 55%, which is the average of break-even point and the strike price. It means we just got 55% of making money. 45 trades are going to lose money. Remember, if you are not prepared to take 44 failures, you can't actually run through the business. So let's accept the reality. When you buy the delta, when you buy an option with the delta of 55, then you can't expect that the particular trade have to be right. But although when we buy options, that given moment, we eventually want to make money. But the reality is only you got 55% probability. So let's try to live with that probability and don't have that your intuition guiding you to book profits early. So how to handle the failure trades? The very first thing I recommend you people is to make sure that you understand that the probability while you buy option is only 55, and be happy even if you are right only by 55. And that 45 trades, remember that 45 trades, needless to be back-to-back failure trades, but that can be a series of failure trades, because the market trend can be a kind of choppy or sometimes consolidation that can actually go against you. So you need to understand it well, that you should be prepared to those failures. It means that need of a money management. So that is where the capital requirement also comes into the picture. So anyway, before I move forward, let me actually take you through that particular process as well. So if you want to figure out how many failure trades, so how many failure trades, how to handle this risk. So what you people can do is, again, you need to calculate this. I'm gonna do it with respect to 14,000 call option. Okay, which we know there are about 55 failure trades are quite expected, but I want you people to calculate this 14,500. Then only you understand the reality, because 14,500, the current premium is only 3.70, because a lot of us tends to buy out of the money options. Am I right? We tend to buy out of the money options. So when I buy this 3.7, which is out of the money option, the probability of me making money is just about 2 to 3%. 2 to 3%. You refer this 3.7 becoming 4.15. So 3.8 become 4.45. So you got a probability of just 1 to 2% for you to make money. In fact, I'm taking this weekly strike. So we have another 4 days for this contract to get expired. So understand the reality. Just by buying that option, you got only about a 3% chances to make money. Am I right? So you need quite a good target. You should not be looking at the target of a 5 rupees and 6 rupees or 7 rupees to sell, because a lot of traders, I see that they buy hundreds of lots, okay, just because the premium is only 3 rupees, and they sell it in a matter of 4 rupees, and they see that somehow I made money. That's not anyway a good trade. But anyway, as far as the failure number of trades, to the point which I want to convey, that remember, the point is you got only 3% chances to make money. Then you need to know how the target to be calculated. Coming back to the original question, let's understand the reality that 97 trades you are going to go wrong. It means you are doing good even after losing 97 trades. Even after losing 97 trades, you are doing good. but you should figure out how you can sustain 97 failures. By any chance, if you buy all your capital in hundreds or thousands of lot just by seeing 3 rupees, you can't survey for 97 trades. So in order to survey in the business, you need to accept the failure. You need to accept the reality that 97 failure is going to be part of it when you buy out of the money option. But that needs a big heart. Am I right? And then you need to have a right target, and then you need to wait for a right time. And then you actually, those 3 trades can make you rich if you know how to handle it better. But the point is, it's not that easy. That is the reason why most of the option traders loses money. Okay. So 2 things I've conveyed to you people. The very first thing is, what should be the ideal target? Number 2, I've made you people to realize a point that we are inevitably going to find some failure trades. But if you buy at the money options and in the money options, number of failure trades can be low. But if you buy out of the money options, number of failures can be slightly high. Okay. And I'm explaining everything with respect to call options, but you can do the same with respect to put options as well. That comes as an exercise as we move forward. And at last, how much capital is really required to do this particular business? I definitely want to emphasize this area. In fact, this itself, need a special or an exclusive video. But anyway, this is a part of that particular content, so I'm gonna keep it inside. Pay attention here. If you buy, let's say 14,000 call option, and if you think 120 rupees is needed, and if you multiply with the lot size of 75, and if you think that the corpus needed from me is close to 9,000 or 10,000 rupees, and if you end up keeping a capital of 10,000 to buy this option, you are absolutely wrong. It means you didn't understand something called money management. Try to understand, we need a logical capital while we move forward. Let's go and check this, again, the delta we already calculated something called as 55%. It means there are 45 trades we are actually going to lose money. Am I right? So 45 trades we are actually going to lose money, and we should be prepared for that. So you need a capital to sustain the 45 failures. That is what very, very important. Okay. So when we do this business for about 100 trades, okay, now we really want to do 100 trades so that 55 can be right, 45 can go wrong. But in order to do hundreds of trades, we are going to see the 45 failures, which we realized a while back. That's why I told you that let's understand the reality when we see how to handle the failure trades. So it is inevitable that we are going to see those 45 failure trades. So that 45 trades, okay, should not wipe you out of the business. So as far as this 14,000 call option, you should need a capital. So I think now you need a capital of 45. Okay. Now remember 45 multiplied by, okay, 45 multiplied by that 120 rupees. Okay. That 120 rupees for every one quantity. Okay. For every one quantity. So if I make it in if I make it in the Excel, if I make it in this Excel for you people to understand it, let me put this Excel sheet here. Okay. Now what happens is I'm actually going to do it this way so that it becomes much easier for you people to understand it. 45 trades is the number of failure trades we are expecting it, and each failure trades can cost me 120 rupees. Okay. So, and it comes with the lot size of 75 rupees. Okay. It comes with the lot size of 75. So I'm actually going to multiply this. Don't be surprised with this number. Okay. Don't be surprised with this number. Okay, this requires a 4 lakh of capital, and you will be shocked now. Why do I need 4 lakh of capital for me to simply buying 14,000 call option? Because it got a chances to lose money for a 45 trades. But remember, this is the capital which is needed for someone to expect a back-to-back 45 failures. A back-to-back 45 failures. But we are not going to see that back-to-back 45 failures. Of course, you make money sometime and you lose money sometime. But remember, there is a possibility that sometime a back-to-back 10 trades can even go wrong, back-to-back 7 trades can go wrong. Okay, but you can't actually undermine. But most likely you don't see something which is back-to-back. When you have an overall probability of 45, then around 80% chances or about 70% based on your risk appetite you can do it. So if I do that, no, I generally go by, let's say, about 60 to 80% depending upon it. So if I go for a 60% of that particular one, then 60%, so you should multiply this with 60%. So if I do that, a 2.5 lakh capital is needed so that you become I say you are a aggressive, not aggressive, a professional option trader. Now you may question me that, Murugan, 2.5 lakhs I'm occupying myself, does it really make sense? Sir, this makes sense for a whole business. So remember, capital is not required for a trade. If you underestimate that you need 120 rupees multiplied by 75 alone, then you are preparing yourself for a one single trade. The big mistake you're making is you're assuming that the trade is gonna be definitely right. So you're not paying any importance to the probability, and that may be the reason why we are going wrong. So any judgment, any opinion, whomsoever it is, it can be in institutions, it can be from a common man. The probability of being right is there, but I don't say there is a certainty of making it right. So whenever we invest our money, we should not blindly invest in a given trade. We should know how to diversify our risk over a trades. For that, you need to do that particular calculations. I definitely recommend you to rewind it once to get this convinced. Okay. So you guys can actually do that with respect to 14,500 call option. Let me do it again because I'm going to ask you questions for you people to exercise that bit later. So if you look at 14,500 call options now, you guys can easily notice that we figured out there is about only 3% chances to make money. Okay, there are 97% chances for you to lose money. Am I right? So it means you're gonna 97 times you lose, not just 3 rupees. Remember, there may be a cost associated. So I'm gonna make it as 5 rupees into 75 for you to actually make money. 95 times you are actually gonna lose money. 95 times and you are gonna lose money. So 97 times into 5 rupees is what you're gonna lose money into 75 times. So remember one thing, you need a capital of how much? Now let's go and calculate it. Okay, 97 times you're actually losing money, and every time you're losing something close to 5 rupees, because I just accounted about at least 1.5 rupees as a brokerage. Generally it comes at least 2 rupees, so mind it as well, and 75 rupees. So if that is the case, okay, now if that is the case, you need to multiply this, which you need around at least 36,000 rupees, 36,000 rupees. Okay. And if I put it for about, 60% of that, so it works out to be 21,000 rupees. Okay. Try to understand it. You need 21,000 rupees capital in order to buy 14,500 option. And you look may be surprised why 14,500 option needs 21,000, because only 3 rupees into 75, 300 rupees is enough. So let me go it for about, if I have a 20,000 rupees, I go for 100 lots. No, that's not the right way of approaching it, because you are risking your entire capital in one shot. So try to understand it, how to do a business. But now this comes with a low capital requirement. Am I right? This comes with a very low capital requirement, but it needs a lot of patience and mindset to make money, because for you in the target for this particular trade is going to be hit by only those 3 times, and if you miss the 3 times, your entire business goes waste. So in order to actually encash money in that particular one, you should be very conscious about encashing. So you should not short sell those 3 times. Whenever the market gives you 30 rupees or 20 rupees of profit, you should not, because you got only 3%. So you should be looking for a good number of amount to be made out of this particular business. But I hope you people get this point. But anyway, if you didn't get it really well, okay, now what you people have to do is segregate your problem into 3 areas. When you buy options, okay, how much capital needed and how many failure trades we can expect from here, and then what should be the ideal target. So you need all 3, how much capital, how many failures, and what should be the target. Okay, and see my slide slightly prior to it and get it right. Okay, and I gonna give you some challenge now. If you really want to get it right, you should also take this question, although I recommended it, because it is not must every, it is not like, you people are sitting and watching this video from a very different locations, so I can't force you people to do it, but I strongly recommend you to do it, because if you take this simple efforts in completing this task, then you can retain the knowledge whatever you have learned it from this particular one. So I've given you those concepts. Now you're gonna get in towards practicing that. Before I get in detail, I have a very common question to my subscribers, because are you really interested in investing in equities directly? Because I'm asking this question from a very different note. You may be an option trader, you may be a stock trader. I'm asking you from the investment perspective. Are you guys really interested in investing in equities from a longer term perspective directly in equities? Because we come up with a portal that can make investors finding a long-term stocks much easier, and it can help you to build a portfolio in a very convenient note. So it's quite interesting for you people can do it, and we already have a good number of people testing that particular portal. In terms of the algorithm is something which we are used to it for a long time, but that particular portal in terms of how that user experience, how it recommends you the stock to buy, because we don't want to have the beta version at the price level. So we are making this beta version for a very short time available for a free for people to experience it. But by any chance, if you feel that, Murugan, I'm also someone looking forward at recommendations, maybe a monthly once, you let me know how many shares. I'm not going to tell you the company name. We are just going to give you number of shares you have to buy so that your portfolio gets properly diversified and you're actually having a good stocks with you. But if you and the convenience also be there, because in one click you can even execute the trade, be it Zerodha or Upstock, you can pick up those broker as per your wish, and you can actually do that as well. So if you are interested, what you guys can do is, in the comment section, okay, use this hashtag. Okay, there is a hashtag, use this hashtag like invest with Axis, because this is the way we can easily get the statistics and we know like how many of you people are interested. And if you are a subscriber, and with this particular hashtag, and we can find you much easily, and then we let you know how to get this particular portal from us. So, and you can actually test it without making any payment. So if you have any feedback, you can also share it with us, and you get quite a good the allowances because of that. So if you're interested, definitely express your interest with this particular hashtag, which is invest with Axis. And in one line, we do have a services with respect to our trade recommendations and training, because we were into option chain analysis, a kind of training program through online we have. And of course, we have index option trading strategies. Our strategies are slightly non-directional and maybe slightly bullish or bearish. So that is most of the time we make money, because you might have seen that non-directional things are there, but our intraday recommendation is slightly on the trending note. It comes into the picture. Okay, at last, here is the challenge for you people now. If you answer these questions, I believe that you managed to get a reasonable understanding from that particular video. But if you find that you are unable to answer these questions, don't have the heavy hearted. It is possible that a very first time you can't answer this, but you can take a break. Probably you can download this video, or you can like it to see that tomorrow and watch it again and give this attempt. But make sure that you are adamant about answering this question, because in a way that you are very clear about taking the content deep inside. This is the first question. Find the target and expected number of failure trades and capital requirement when you buy any of these options. Let's say if you're buying 14,000 call option, what should be the capital requirement? 13,000 call option, what should be the capital requirement? Remember, don't tell me just by looking at the premium. Tell me the capital requirement by understanding the delta, by understanding the number of failure trades, and let me know. I hope you understand what I'm trying to convey to you. And if you wanted to have the 60% of the probability, or 80%, or a 30%, it depends. So I want you people to tell me properly. So when you write it in the comment note, it's better you mention the strike price, and you also tell me what is the target and expected number, so that you get it convinced about it. So this is an exercise which I definitely recommend. So if you don't take this part of this exercise, it doesn't make much sense for you to watch the whole video. And the next one is a very interesting area. Okay, And remember, whatever the premium you should refer is actually available in this particular one. So you should refer this particular one. And this is a very interesting question, not for a beginner, but for a pro. Okay. And tell us what suits you better while buying options. No, is it in the money or at the money or out of the money? Because out of the money may require slightly low capital, but it got a very poor probability. At the money got a better capital requirement, but it got a higher meaningful probability. In the money, I want you people to try with various strike price and understand the reality. Okay, and you have to justify me. It is not you're justifying me, you're justifying yourself as well. You get to know the reality when you put it in the paper once. So this is the opportunity for you people to realize what makes you feel better. In fact, in the money, at the money, out of the money, in all three ways you can make money. But you need to know what suits you really better. For that, you need to justify once in your life. Probably you can do it in the below section. So that's how you guys can definitely answer this. So I hope you made this appeal is also good. So we honestly taken a serious efforts for you people to understand it well, and not just throw you a video. And upcoming video, we got already a good number of votes for this topic, that a trade that can make option buyer better. Remember, most of you people watching this video must be interested to become a vanilla option buyer. But I can tell you something you do definitely make you feel better. There is a very interesting content I have, a very interesting logics, which is in fact definitely good for option buyer to consider. But if you wish to know that, you can definitely include a topic in the below. See, this is a hashtag for this particular video, so don't use this hashtag to other places. Okay, I want you people to tell me that option buying in the below comment channel, because I understand that you wanted to know about what makes it better. Okay, so if you mention in the comment with this hashtag option buying or vote for option buying, then we understand that you are looking at it. So it becomes much easier for me to collect the statistics. And the other one is, by any chance, if you are interested in knowing how to invest for a longer term in spite of the uncertain market is something which exists always. Okay, it's not that only 2010 or 2011 or 2000 or 2009 is uncertain. Market is always uncertain. Okay, there is a lot of uncertainty exists. So, but in spite of that, a lot of long-term wealth creation happened. But if you really wanted to know more of those things, okay, then you can actually let us know. Accordingly, we can actually share our opinion, thoughts to you people, because by way of you people voting for our video, only then we get to know what sort of subscribers we have. Accordingly, we can work and make it better for you people. So I definitely appreciate if you guys give us a thought, and if you have that as an expectation, definitely do it. You guys can vote not just for one. You guys can definitely vote for a few topics as well. Okay, but don't vote for everything just because I've asked for it. If it makes sense to you, then vote for it. And the other topic is the exclusive video on money management for option traders. I seriously believe it deserves, but we didn't see much of you people asking for it. See, I know something is really good for you, but if you people are not interested, we can't actually create that content, because anyway it is not going to reach you people. So we should make sure that something reaching you people. So anytime you realize that risk management is important, come and vote here. Then we count you, then we think about developing that content. But definitely I vote for it. But I don't know how many of you people realize that importance. But if you see that, okay, Murugan, I am also interested about risk management, then you actually vote for it. And of course, if you really wanted to go back to our previous videos, definitely check out our YouTube channel, because we have a lot of good content already posted. Maybe now you guys can see there's a 2 widgets, right and left and right, and that those 2 videos may be referred by YouTube. You can definitely try one of our videos, or if not, you can go to our channel directly and website visit us. And of course, if you want to know more about our services, do visit our website, which is www.eqsis.com. Thanks for watching this video all the way till this minute. Hope it helps you to make it better.